Hey guys, welcome to the COM Dollar Technicals for August 22nd, August 26th, 2016. Kind of an interesting, sort of a mildly bullish, I guess, week in COM dollars. Really, it's very much still a yield anti-dollar play with oil overlay, of course, for dollar CAD. And overall, it's actually been a relatively positive week for COM dollars. At least they sort of held around most of their highs. Really nothing going on the calendar. It's just a very, very quiet day. There's, all the RBA, RBNZ, BOC stuff has kind of been done. Nothing really coming up as far as data set. Australia had good employment data last week, of course. Kiwi had a little bit pretty decent employment data the week before, but nothing, it seems everybody is on vacation, even in the Southern Hemisphere at this point. So I don't think data is going to be much of a driver. I don't think anything out of Asia is going to be much of a driver, or Asia Pacific is going to be much of a driver. It's really going to be a function of how the market feels about the dollar, and as that is going to express itself in the COM dollars. As far as the levels go, we're certainly reaching. I think the interesting thing is that as bullish or as sort of positive the moves in COM dollars have been, especially in the Aussie and the Kiwi, they seem to be running out of momentum. Now, I say they seem to be because obviously we can get a push through fresh highs, and that blows up the whole fade the move strategy. But it's worthwhile to note that we've tested a lot of these highs several times and have not been able to break them. So let's just take a look at the levels here and where we stand so far. We're still standing at 77, 75 on resistance support on Aussie. CAD had a lot of strength here. Dollar CAD dropped below the 130s. We're now squarely now below the 130 level. 30 now becomes resist. Support is over around 126. That's really an oil story. Now it's a story basically of oil going up towards the 50 level. I think oil can't clear 50 level. If oil does clear it, of course, then we're breaking down to 125 at that point, because CAD is really trading strictly on oil as far as flow goes. But if oil sort of exhausted its upside move towards 50, Saudis begin to pump more. The frackers begin to pump more as we get to these levels. I think you see CAD begin to to fade back up, and dollar CAD start to go back up above the 130. I still continue to think that ultimately it's a very tough trade, because you're basically making a trade on oil, and anything else it's hard to predict a market that we don't necessarily trade. But if your assumption on oil 50 being the cap of the move, then dollar CAD becomes a buy around these levels, all the way down to the 26 level. And then Kiwi dollar also failing 73.50 several times. I suppose I should make it 73.50 because that's the highs on the resist point several times. And that's what's interesting to me, is that it's not necessarily that we have news flow. It's just when you're watching the price action and you have it failed 3, 4, 5 times, it's worthwhile noting that, because it suggests that there's clearly a lot of difficulty clearing that overhead resistance. So let's take a look at the charts here. Let's take a look first at Aussie. And the Aussie move, actually, as you see, if you're looking at it on a micro small level, you basically have a series of lower high. You basically have a fade of the momentum here so far that comes down to the 75.50 on the support level, and maybe as far as down as 75, with a failure of the lower highs. If you look at this, I think it's worthwhile to kind of look at this on an hourly basis for the last 5 days, just to see how we tested, and on an hourly basis you have a series of lower highs and a move down. Now we came back down to hold 76s a couple of times, but I think if 76 goes, very easy for us to make 75.50, possibly even 75 as the week progresses. Let's take a look at the Kiwi, similar kind of a signature. First, let's take a look at dailies. Here's the dailies, right? So Kiwi not as weak as the Aussie, but still failing 1, 2. Actually, if you count this, 1, 2, 3, 4, 5, 6, 7, 8. 8 times failure at around the 73 level over the last 3 or 4 months. And again, I'm going to look at the hourlies just to give you a more granular look. And you can see we can't get up above the 73s, although it doesn't look nearly as bad. The signature of the Kiwi looks a little bit better. You have a series of higher lows here. They do seem to be buying the 72s against it. But again, we start breaking down. Below the 72.50. It really similar story as the Aussie. It just kind of calls in the near-term support at 72s. The longer-term support, of course, comes in at 700, but that's quite far away. But if anything, this lack of momentum technically may be giving us a clue that the COP dollars are shorts. That's sort of a, and I think the interesting part here is what can drive that is, of course, the idea that the market maybe begins to feel more confident that the Fed is going to tighten policy, even if they don't tighten policy in September, but they will guide very, very firmly to tightening policy in December. That alone could be enough to trip us towards the unwind here, because the reason why you're starting to see a lot of this bunching up here is you have basically a whole load of people who've made a ton of money, and profit taking now is going to be the primary driver. And once profit taking kicks in, they're going to start selling this very hard down. And the support levels here that we know of are 71 first, 70 to the downside. Very interesting for us to see if the range kind of gives up at this level. And then last but not least, of course, Caddy, which is really a separate trade, sort of an oil-driven trade here. But you saw much stronger. The irony of the whole thing is that Caddy really had a huge amount of strength here. Dollar CAD just came way down. I think 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 days of continuous. Is it 1, 2, 3, 4, 5, 6, 7, 8, 9? 9 days of continuous decline. That's very, very rare, and generally provides a good opportunity, for a turn move. We are holding right in front of this 27 lows. We did bounce back. Ultimately, honestly, it could also be a move of weakness in commodities. If oil begins to kind of collapse a little bit, come back down on profit taking, and gold starts to drift lower, all of those things could move the common dollar currencies to the downside. So I think the takeaway this week is we don't have any real fundamental trigger set, but we do have, from a price action point of view, pretty clear signals that momentum has run out of gas. So you can take those signals and essentially begin to fade the moves with very tight stops. Obviously, stops right above the near-term highs, just to see if the technicals were good in forecasting the potential turn to the downside. That seems to be the bigger story in COM dollars, and it looks like maybe this is going to be the week of where relative weakness comes into play.